Welcome to Poor Millionaires. Today's guest is Martin Sjogren, aka the Frontier Viking. Martin has spent years immersed in frontier markets, which he believes are one of the most underappreciated and under-researched sectors in the investment landscape right now. He also shares his formula for screening the best places to go hunting for bargains. Poor Millionaires is the show for people with investable wealth of $1 to $20 million. We strive to educate, connect, and inspire, to give you the tools you need to thrive and secure lasting prosperity for yourself and for your family. PoorMillionaires.com. Invest with ambition. This podcast is for educational purposes only. The information does not constitute financial advice or recommendation and should not be considered as such. Value of investments and any income derived from them can fall as well as rise, and you may not get back the original amount you invested. Welcome to the show, everybody. I'm here with Martin Sjogren, also known as the Frontier Viking. It's the first time I've had a real-life Viking on the show, Martin, so welcome.
All right. Glad to be here. Thanks.
So you've got an unusual investing background. Can you tell us a little bit about how you ended up becoming fascinated by frontier markets?
Yeah. So I always liked traveling, and I've been doing politics at youth level for many years. Right, that allowed me to go to a lot of these weird countries, usually to meet like democracy activists in Africa, Asia, Latin America, and since then I've been fascinated by it. I met my wife through that, who is from the Ivory Coast in West Africa. So I lived several years in the Ivory Coast, and makes you kind of see a country from the inside. And I try to do businesses there also, and I've done a lot of real estate investing in Africa, which is fascinating. But you also see the bureaucracy and the downside of countries and how difficult it is for entrepreneurs in such countries.
Yeah,
and investing is something I've been interested in parallel. I started from my student dorm in 1999 and invested in Swedish tech stocks basically, and didn't really know what I was doing, and it all went up and then it all went down again, and now kind of more recently I started taking investment more seriously, and it's such an obvious niche frontier investing that suits me, and I think suits other persons too. That's a bit uncovered. Not many people do it, and there are fantastic opportunities out there.
So you kind of had a bit of a baptism of fire with the whole tech stock thing and the .com boom. So what was it that kind of drove you to frontier markets? Because obviously they're kind of, I guess they're kind of seen as quite risky, quite exotic. It just seems kind of like a bit strange, given you obviously you were burnt with the tech stocks in the .com boom, but then you still were kind of hunting for that sort of high risk, high return sort of scenario.
Yeah, it's also that I had quite a big part of my net worth in property in the Ivory Coast already. So for me, investing in the stock market, I was diversifying out of it anyway. So that felt less risky when you can like diversify and across the world. And it's also the opportunity that I'm seeing that frontier market is one way where small investors have an edge over institutional investors, because they can't go in many of these markets because of liquidity constraints, and they also have regulatory mandates that just forces them to be diversified in this way, and they have to follow usually the MSCI index, which does cover some markets, they qualify as frontier markets, but then there are a whole bunch of interesting countries below that they have difficulty in investing in. And if a country graduates above this category, then it's more difficult to them. And it's also that there have been some quite large funds investing in frontier markets, but over the last 10, 15 years, they've all shrunk. There've been this the iShares Frontier Market, like an index fund, but they shut down in January 2025,
right?
Because it's difficult to be a fund investing in frontier markets because of liquidity, especially like an index ETF that has to be able to meet redemptions all the time.
So what exactly is a frontier market then? How would we define a frontier market these days? Because I think most people are kind of, they're aware of the concept of emerging markets and developed markets, but maybe not so much frontier markets. So how would you?
Yeah, I mean, officially when people talk about it, they usually go by the MSCI definition of it, which uses three main criteria. One is how developed the economy is, and it's the size of the market and the liquidity of the market. and that means that even a country like Iceland officially is a frontier market, even if it's one of the richest countries in the world. And then countries move between the frontier and emerging. But I mean, I looked at this and I felt like I don't really care about the MSCI definition of it, right? I go wherever I found good opportunities, anywhere outside like some core Western developed countries that I take, okay, outside of my niche, right? But anywhere else in the world, like I do even emerging markets, not necessarily frontier. Frontier is the name I gave to the Substack. It's kind of roughly covers. But when I look at my portfolio, it's like I'm big in Uzbekistan, for instance, which is not even a frontier market according to MSCI, and Malaysia, which is an emerging market and not a frontier market either. And there are plenty of these countries that are not even classified. And MSCI has a category called standalone markets, which is not frontier. It's like a step below, but typically funds can't invest in either. And yeah, but then you have this like large active funds, which have shrunk. The biggest of those is Templeton Frontier Market Fund, which shrank like 85% in asset under management the last 10 years. It's difficult to be such an even active funds, and even if they legally aren't bound by the MSCI index, they are in practice by these regulations. If they want pension money fund, if they want this UCITS classification, they have to follow these bounds. But they're limited by liquidity, and also it's hard to have fees. That it's expensive to have specialist analysts for all these weird odd countries around the world. So it's hard to get the fees to cover the returns.
So it's difficult to invest in these markets, as you say, but also with that, I guess, comes the opportunity. And I think one of the statistics that kind of encapsulates that quite well is the fact that frontier markets only make up 1 to 2% of global equity market value, but they actually represent around a quarter of the world's population.
Even over a quarter. Yeah, just looking that up. So yeah, and that's opportunity. Many people are seeing, but it's hard to access. And I was looking at this again, this Templeton fund, right, and that are focused on frontier market, and what they do is they can just go to the most liquid name in each of these countries, and they have to since Vietnam and Kazakhstan, I think Romania are the biggest officially classified frontier markets. They have to have a large part of their portfolio in those countries. And I looked at, they have like the biggest bank in Slovenia, biggest bank in Romania, and the biggest bank in Kazakhstan, and like 2 names in Vietnam, right? Whereas I can go everywhere, and I can take smaller names,
So they kind of the institutions are kind of forced into this handful of big names essentially.
So then and they're not having fantastic returns either. I can see why. But then I should say, so they're like boutique funds that they don't take all these pension funds capital, like the Asia Frontier Capital, and they can go anywhere, and they're also smaller, but they still have. I still have less liquidity constraints than just a private investor than such funds are, but they exist. But they're like, it's a small boutique sector.
Let's dig into that a little bit more then. The whole the angle of small private investors having an advantage in this sector. So just give us a bit more of a detailed overview as to what the advantages are for private investors in this area.
First of all, you can go anywhere, and you are less liquidity constrained. And well, I mean, what I started by looking at this, and I thought, okay, here we can find companies that have fantastic growth, they're quality, and they are cheap valuations, and they're profitable, and they have a strong balance sheet, right? They got it's a wonderful company at a wonderful price with a strong balance sheet. They're everything. The only problem is it's a country. When you say the name of the country, people are very surprised that you invest in there, right? In Uzbekistan or in Nigeria or Kyrgyzstan or places like that. But that's I find it's a little bit similar to a lot of people talk about microcap are great to invest in just because of they're not covered by analysts, and it's more difficult to get information of it, and institutions can't go there. Similar, I say it's a similar edge you have in frontier markets. Just it's more exciting, right? Because you get to learn how the world works and go to multiple places around the world. And you also have there also is a bit of I find what I call an edge of inconvenience that it's not so easy to access those places. You have to do a little bit of work, especially if you're just an individual investor. Many of these countries, there is no interactive brokers covers a lot, but not most of these markets that I look at. So you usually have to open a dedicated brokerage account for these countries, which I've done for many of them. But that's also interesting because these brokerage firms in these countries are usually, they don't have so many foreign clients. And when you get one, you're treated like a big fish, right? So this broker in Uzbekistan, he's great. He's just available on WhatsApp, on his personal number, 24/7, basically. And this broker in Kyrgyzstan, where I got this letter by the CEO of the broker, and he was like saying, I went to the annual meeting of this company, and I thought this. And by the way, if you're coming to Kyrgyzstan, I'm going to help you set up your trip.
I really love that phrase, Martin, what you used, the sort of inconvenience is an edge. And I think we can talk a little bit more later about your broker directory for accessing some of these markets, which is quite a useful resource. But what makes, because you mentioned microcap investing, what makes you more attracted to frontier markets vis-a-vis investing in microcaps in the UK or the US, for instance?
I mean, I like microcap in developed markets as well, but I find that there's a lot of people already doing that, especially in the US and Canada. And I find you can find even more interesting opportunities in frontier markets, and there is nobody else doing it. Especially if you look at microcaps in frontier markets, right? That you get the inconvenience, and you got some sort of double discount, and I find it super interesting, and it's because fewer people are doing it. That makes it.
And now for an important message from the boss.
Hi, I'm James's wife. You don't know me, but I know a lot about this podcast. I know how long it takes to record. I know how long it takes to edit. I know how often he refreshes the download numbers like they're a heart monitor. So I'm here with a small request. If you enjoy this podcast, even a little, please like it, follow it, subscribe. Whatever makes the internet decide this was all worth it. Because when you don't, he starts saying things like, it's actually growing nicely in a very targeted demographic, which means 7 people all named Mark. So please, support the show, help the algorithm, restore domestic peace. Like and follow the podcast. Thank you.
And what about the risks? Because I guess this is kind of like the elephant in the room, isn't it? When we talk about these markets. I mean, most people would literally run a mile when they start to hear about some of the countries that you're investing in. So how do you kind of think about corruption and political risk and all that kind of thing? And how do you sort of manage that?
Yeah, I see it as, well, I'm not saying that all frontier markets are good investment, like far from it. The premise isn't that all frontier markets are good. There's a reason why these countries are poor and have low economic freedom, usually. I live in these countries, can kind of see the corruption, who usually got an elite that have political power and also economic power, and if you're an entrepreneur, it can be tough when you're trying to compete with those kind of people. So definitely problems. But just to take an example, we got it was in 2021. There was a coup in the country of Guinea in West Africa.
Yeah,
and so the new was a military junta that took power, right? But that's just how we know, because they went through the assets of those in the previous government, including this Minister of Defense. So they just listed an asset inventory of this Minister of Defense owned, right? And I'm just going to list it. And he had $60 million in cash, 75 kilo of gold, 17 diamonds, 47 villas, 53 apartment buildings, 18 luxury cars, 75 plots of urban land, 3,700 hectares of rural land, 7 hotels, several mineral bottling plants, 16 chicken farms with 2 million chickens, 13 mineral rights, concession for mining minerals, and the exclusive rights to export cashew nuts, basically.
All acquired legitimately, of course.
Exactly, exactly. So I mean, it's only because he lost power that you know this. But of course, there are guys like this in many of these countries, right? And what you do if you're an entrepreneur and you're competing with a guy like that, basically can call in the police and do whatever you want. Yeah, that just to give sense of how bad it can be, but it doesn't mean it's not not bad to invest. You say that, yeah, it's like, sure, you have people that are in power. Yeah, they are very likely quite corrupt. But I say, if you got a country where we assume the people in power, well, they stop entrepreneurs from doing business by having like legal monopolies that can't, and having bureaucracy that stops them, and plus they maybe like if you assume they steal maybe like 80% of all the enterprise in a country produce, right? If that's the starting position, but then they do some sort of reforms and they go to stealing just 20%. Then suddenly you have a boom. You have entrepreneurship just goes from you go from a disaster to just bad situation, and in such a situation can be a really great investment case. The stock market in such a place can improve.
Yeah, I guess there's still money to be made if a country goes from very bad to bad. You've still got an improvement. There's money to be made there, I guess. So what separates the investable countries from the uninvestable ones in your mind?
Yeah, I'm looking at where things are improving, right? So I did something called I call it the inflection screener. Starting point is that like a neighboring country of the Ivory Coast, which is Ghana, which has long history of fiscal mismanagement. They overspend. The IMF came in and bailed them out. They got a new government in. They overspend again. They had this 60 years basically of such a cycle. And in 2024, the same guy who was president before, who did overspend, had the IMF had to bail them out, and he campaigned on this time I'm going to be fiscally responsible. But I mean, I and others didn't really believe him. But he did come in and he actually was. And he really did, at least for the few years it's been in power, it's been a really meaningful reforms. And the stock market noticed this. So the Ghana Stock Exchange went up in US dollar terms with 4.3x in like 16 months in 2024, 2025.
Wow.
And I thought, that's next to where I live, and I completely missed it. This can't happen again, right? I thought, how can I spot when a country like improves like this? So I did, now you got this fantastic AI tool. So I created this thing called inflection screener, where first checks, is the country in crisis? So like if we criteria for that, like if there's been a recent sovereign default, inflation is about 25%, if the currency has lost more than 40%, GDP contraction, IMF comes in, right? It scores on those criteria. Then you take all countries in the world that meets this are in a crisis, and then you check, is it improving? Is inflation falling? Is the currency strengthening? Are the FX reserves increasing? Is the primary balancing improving? Real rates positive? Do you have a credit upgrade? And you check the valuation, both in absolute terms, like how is the PE for the whole stock market? How is the dividend yield? How is the currency versus the purchase power parity? And how is the cyclic adjusted PE versus the history? And if you put this together, you got one valuation axis and you get one inflection, or is it improving axis. So you got a quadrant, you got with 4 quadrants, I mean. And so you got, you can start with whole countries that are expensive but they aren't improving. That's not so interesting. You got those that are cheap but they're not improving. I call it the crisis trap. And for instance, Lebanon has been there for forever. Egypt has also been there. We just don't see improvement. Yeah, it's cheap, but we don't see improvement. So maybe not invest. At least something is here improvement. And then you have those that are improving, but they're already expensive, right? So they have re-rated. It's too late, you would call it that. And Ghana is right now in that category. The stock market has gone up so much. Argentina is already there. People are already seen Milei's reforms. Yeah. But the interesting quadrant is when it is still cheap and it is improving, right? That's where I think it's good to invest. So and I looked at that recently. Right now, that quadrant is quite empty.
Right. Okay.
we have we have Kenya is an edge case. Ukraine is kind of moving towards it,
Right.
but it depends on the war, obviously. But that's just right now, right? I kind of think I'll keep checking this, and if it comes something shows up there, I'll investigate.
Well, what about the other opportunity though? Because you also look at what you call the long-term reformers, don't you?
Yeah, exactly. It's not just crisis. There are countries that are just steadily improving. GDP is growing, and it isn't. And they don't have a crisis. Like the archetypical example of such a country is like Singapore after independence in 1965, after Lee Kuan Yew, where just decent leadership, very good leadership, and under 30 years. Everything got better. Stock market obviously went up, and everybody invested in Singapore. Whatever they invested in 1965 did had a fantastic deal. So I'm trying to look at such countries as well. And right now I'm seeing when I'm checking for the check there is a little bit are they cheap, and is the good quality and good growth? Are there good reforms, good corporate return on investments, good demographics? And right now I'm seeing, Chile, Uzbekistan, Malaysia, and, South Korea. If you just look at the small caps in South Korea, they're still cheap. Mauritius, Peru, Greece are the countries that kind of like starting point to look into. And I think even before starting thinking of this way, I put like a big part of my portfolio in Uzbekistan and Malaysia.
So how repeatable is this approach then? Have you tested this this sort of framework on a historical basis?
First of all, crises keep happening, right, since the dawn of time, basically. So it's repeatable in that sense. But then I took this inflection screener and basically backtested it, ran it at different times in the 1990s, 2010s, and I just wanted to see without tweaking any of the parameters, would it have found first of all, would it have found Ghana was my first case, and it did find Ghana, and then it did find a few other interesting. It found Iceland 2010, and a lot of Asian countries emerging from the Asian crisis in the 90s. And then maybe also the counter examples of like the false positive and false negatives are interested, because Greece was in a crisis like 2012. It would have been good to invest there, but it did not show up as improving in my screener, because the improvement came from abroad. It was like the European Union and Draghi saying that we'll do everything what it takes, that they kind of pushed Greece out of the crisis, but it wasn't internal from Greece. So that's why I didn't see that. And you got Argentina, tons of false positives. You think they're reforming, you think it's getting better, but then they keep falling back. It's been never invest in Argentina is what people have said in the past. But right now, though, it seems to actually be for real this time. And then in this back test, I just thought I had fun. I got back further in history, where obviously the data is very hypothetical, but I found this in year 1784, right? You would have, if you do this screener at that time, you should have found Britain, which was a frontier market at the time, right? Just having lost the American Revolutionary War, so there was huge debt load. The Bank of England was under stress.
I think even more than we have now on a debt to GDP basis, right?
Although right now it's a pretty unusually tough situation. So you have so they had William Pitt the younger who came in and did like really meaningful reforms, actually influenced by Adam Smith. So make the administrative state more efficient, tax reform, custom reform. He made a huge free trade deal with France, the Eden Treaty, I think it was called. And introduced more fiscal discipline. And then he actually did nationalize the part of the British East India Company, but more the parts that were like government parts that company was doing, not actual commercial part of it. That was nationalized later. So the idea is in 1784 England would have been this early inflection quadrant, when a great to invest in Britain at that time, which they went on to dominate the world for a century after that. And others example of crisis investing being good investing in a crisis. If you stay at that year, I have the original Rothschild, Nathan Rothschild, who said invest for blood in the street, referring to the Napoleonic wars. And if you move a little bit further up, you have John Templeton, who famously invested just at the start of World War II in all U.S. stocks, which were very depressed at the moment, and people thought he was crazy investing in the very, very cheapest company. He bought, I think, 100 stocks of a price with below $1 in 1939, just at the start of World War II. Even some that had gone bankrupt. His broker told him to we can at least skip the bankrupt company. He said, no, let's do it. And indeed, many of those bankrupt companies came out of bankruptcy, and with 1942 had multi-bag that whole portfolio. And then he did the same in Japan in the 1950s and 60s. But Japan was a frontier market and seen as a very odd choice to invest in. Still tainted by the war, seen as a very low quality producer. And again, he did a fantastic return on this Japan investment. Japan was more of a long-term, steady, high-quality grower from the 1960s up the next few decades.
So just looking at your current portfolio then, Martin, there's not quite blood on the streets at the moment in Uzbekistan and Malaysia, which seem to be two of your favourite countries at the moment. So what is it that draws you to those markets right now?
So we start with Uzbekistan, which was when I started my Substack, by actually reading about it and seeing what an amazing opportunity it was. First, you had until 2017, you had this classic dictator, strongman, Islam Karimov, who had repressive currency control, basically very few foreign investors, even had forced people to go and collect cotton. And when the new president came in, it was the prime minister of this authoritarian guy. Everybody thought it would be a continuation strongman, basically. But to everybody's surprise, the new guy, Mirzoyev, I think it's hard to pronounce, he turned out to be a reformer, right? and made the currency convertible, which is huge, improved the business climate, started privatizations and liberalizations. And since then, Uzbekistan's economy, from a low level, has really started improving. But stock market was still backwater, still extremely cheap. And also at the same time, the demographics of Uzbekistan are fantastic. It's not a small country. It's like 39 million people.
Yeah.
And the average child per woman is 3.5. So it's a country whose population is young and growing. And the number of children per woman is trending up, which is completely unique in the world. Even Africa is it's high, the fertility rate, but it's trending down. But in Uzbekistan, for some reason, it's going up. I don't know why, but it's fascinating. And it's not a rich country. It's maybe like 3,300 GDP per capita nominal. Whereas the neighbor Kazakhstan, which is maybe 14,000.
Okay.
And I see there's no reason for Uzbekistan to be poorer than Kazakhstan. They're very, very similar people. And with finally decent macro environment, decent reforms, and increasing economic freedom, it's obviously going to be richer. And then you find the stock market where I went to this. Like the biggest site for the Uzbekistan stock market, and they have a screener, and the criteria for PE, there are like 3 boxes you can tick. It's negative, it's below 5, which they call low, and above 5, which they call high, which says something about the valuations in the country. So I thought, that they got fantastic tailwind and fantastic opportunities, and a few people talking about Uzbekistan, and it's not even a frontier market. So that's one example.
And Malaysia?
That's a much richer country than Uzbekistan. It's officially an emerging market. But what's fascinating about Malaysia is, first, it has a great growth trajectory. Many countries in Southeast Asia are stagnating, but not Malaysia. They're quite decent institution, and it's a quite poor country, but it acts as a first world country in many ways. For example, their central bank rate is like 2.75%, inflation rate is 2%, fiscal situation is quite under control, and they have a huge tech industry and semiconductor industry, which typically countries as poor as Malaysia don't have. Yeah. And they also have quite a liquid and active stock market with many small family-owned small cap companies that are like profitable, strong balance sheets, and super cheap and very overlooked.
So a real stock picker's paradise then, yeah?
I think so. Yeah, at least among the small caps. Yes.
Yeah. So I want to talk now about the resources that you have to offer investors, because you built this global broker registry, didn't you? So tell us a little bit about that.
Yeah, because since I'm writing and talking about investing in all these odd countries, like the obvious questions I get all the time is, but how do I invest in it? So now when you get AI tools and you can build a plumbing without being like a advanced programmer, I thought I'll just create a site you can click on any country in the world and it will tell you how to invest in it. And go through all the brokers in the world, like first the one country brokers and also the multi-country brokers so I created that. It's called globalbrokerregistry.com. And also, like, the idea is also how to invest in a country. It's not only brokers, but also some countries that don't even have a stock exchange, but there might be a company listed somewhere else that has the majority of operations in that country, and then I list that too, which made a point of really bringing out those companies, because many of these what we call the weird shit Sven Lawrence conference companies, they come out there, like for instance Cuba or Democratic Republic of Congo, Venezuela. The stock exchanges that are non-existent or not possible to invest in, but you still, if you go to the site, you still find companies that are active there, local or foreign companies that are.
And what about your Substack then? Because you also write a blog, don't you, on Substack?
I started late last year. Started with Uzbekistan. They both write about individual stocks that I found in all these countries, and about quite recently focus on my investment process, and also generally about writing about a country, why it's interesting, and the history and politics of the country, and then I after that dig into stock markets and the stocks that I find interesting there.
Yeah, so, and listeners would find that by just searching for Frontier Viking, right? Is that
frontierviking.substack.com.
So Martin, I just want to finish by, if you could just kind of, what would you say is the biggest misconception that people have, do you think, about investing in frontier markets? And what would you want people to take away from this podcast, if you could kind of choose one point to take away?
Yeah, well, I mean, first of all, I'm pretty happy not having too much competition in this space. But regardless of what to say, I don't think that's not going to change. But I mean, what I like it's that I find it really interesting and fun to go and like investigate and analyze the country, and also travel to these countries and get to know the people and countries. That makes it very, very interesting in itself, and that there are fantastic opportunities that are uncovered that is not available to the big institutional capital. That really is an advantage when you are like a small private investor.
It really sounds like it's almost like it's more of a hobby, kind of like a passion project for you. It's not just a means to kind of to build wealth and to make money. It's a real sort of pastime for you, isn't it?
Yeah, it's both, which is a good thing.
Yeah, absolutely.
I guess.
Yeah, great. Martin, thank you so much for coming on the show. I really appreciate it, and wish you all the best with the Frontier Viking. And I'll be keeping an eye on it.